Hey friends, Eric Hale here with another episode of the Everyday Trader, and Greg Jensen's here with me as usual. What's happening, Jensen? Greg, look at you growing out the beard at the wrong
I'm
time of the
trying.
year.
I'm trying to become more of the mountain man. I'm getting that age where I've got a lot of gray showing
Yeah,
here.
looks
So
distinguished. So,
yeah, I like you've got that nice little thin beard, thin gray beard going on. So
this is about being lazy. When I discovered that I could let this and I didn't look bad and I didn't have to shave every day, it made my life a little bit easier. So
there you go.
uh it's comfortable. So it's yeah. Anyways, so you getting ready for the how's fly fishing yet going on? What's happening there in out in the Rocky
Not
Mountains,
quite.
the
We're getting
Tetons?
close. It's still too much water. I mean, all the snow is in the rivers now. All the snow melt off. The rivers are actually pretty dangerous. Like the really avid whitewater guys, the whitewater rafters, they're all in the rivers right now.
Oh, okay.
But yeah, the rivers are big right now. They're ripping. So,
Mm.
but yeah,
Rivers are ripping.
it's finally turning into summer, and
Well, you
it's
and I were
time to.
talking about getting together in July, and let's go fishing in July. If we remember last year was what were the last time I came out for this Rocky Mountain Summit, the Rocky Mountain Economic Summit. Is that what it is? Or the Teton Economic Outlook now? I forget what the
Yeah,
name
and
is.
yeah, they've rebranded it, and yeah, that's we will. Let's go fishing. We can maybe catch a stonefly hatch or go up to. Well, you know where I'll take you, and Barry watches this. Barry's been one of our guests here before. I'll take you up to the ranch, up at Henry's on Henry's Fork. It's beautiful up there, and maybe we can convince Barry to come out in July. Come fish
Maybe
the
we
ranch.
need a mini summit. We could. Well, this conference is going to be pretty awesome. We were just going through the agenda of all the people that are going to be there. Some well-known economists, as well as former central bankers, and as well as several TV personalities that you may know from Bloomberg and CNBC as well. So it should be it's a great agenda. I'll always look forward to that event in July. So that will be fun. And other than that, we got other stuff going on too. I just got back from the Berkshire Hathaway, and we just talked for a whole bit and said, "Man, we should have been recording this."
So highlights. What were your takeaways from the Berkshire Hathaway meeting this last time around? This is what, your fourth time you've gone?
Yeah, yeah. So it was well, my reason for going was, I had an opportunity one time to see James Brown live and passed it up, and he died like 6 or 9 months later. And so being having the opportunity to see the Warren Buffett and Charlie Munger, God rest his soul, in the past, has been well worth it just to go and get the wisdom. You definitely get some things. There's a totally different vibe there. And But this year, obviously, the vibe was different because the big loss was Charlie Munger not being there. As far as key takeaways go, I left with I didn't get any really wonderful nuggets. I think the only notes that I have, I guess my notebook's not here. The only note that I took was try to avoid making stupid decisions. And I think that was a quote at the beginning of the meeting. They always start off with a movie, which is only for the attendees. And this year it was a montage of Mungerisms. So a lot of the things that Charlie Munger has said over the years, bits of wisdom. And one of them was, always try to avoid making stupid decisions or avoid stupidity, which is something I do take to heart. That was, I think, the only note I took the whole time that I was there. The energy was definitely different, and I thought most of the time, that Warren, it's Warren and Charlie, but it's Warren's show, right? And Charlie's kind of there, but Charlie never said much. But it's like Penn without Teller, or I don't know, Starsky without Hutch or something. Those two guys. In fact, they had a whole bunch of, those couples of pairs of people that they kept showing back and forth between these two, and certainly they go down as an iconic couple of people, two partners together. And Charlie never said much at the meeting, but when he did say something, sometimes Warren would say, "Charlie, do you want to say anything about that?" And Charlie would say, "Nope." And sometimes drop little bombs that like, uh, Bitcoin is a turd or something like that. We'd see these little things that are just, whoa. So yeah, Charlie was missed. In fact, there was one time where Warren was answering a question, and I don't know if you watched the recording, but there was a notable uh, sigh in the room when Warren was answering the question, and he went, "Charlie," and having done this for decades, doing these meetings in this way, Warren was sitting next to Greg Abel, who will take his position as the CEO, chief investment officer. uh Greg Abel was sitting next to him, and he meant Greg. He meant to have Greg answer the question, but he looked to his left and said Charlie. And there was in the room there was a notable sort of a bit of energy. So there's that part of it. I do recommend going if you can. I mean, he's 93 years old, and he's not going to stop doing these meetings until he is physically incapable of doing those meetings. So hopefully we get a few more years out of him. I hope next year we'll have a little bit more energy. Two notable things you might have heard: there was an 11-year-old boy that asked the question, if you had one more day with Charlie, what would you do? And Warren said, I wouldn't do anything different than I did every single day. He says, Charlie and I spent every day together trying to learn, trying to look at opportunities, trying to improve. And he said, if I had another day with him, I wouldn't spend it any different than I did every other day. And he didn't said, I don't need another day with him, which it was it was heartwarming to hear that. And
Yeah, I
that
think that's,
Warren was that
I was just going to say, I think that's an amazing piece of advice from a guy who's been down the road a number of years and has learned that, and also a guy that's had all the money in the world for the last 25 years, 30 years, that he could buy anything he wanted. And it's the people that you remember, that you take with you. And I don't want to get religious in today's program, but if you believe in life after death, then you don't take any of this stuff that we make here with us, but you do take your relationships.
right?
So
And that
yeah,
was what Warren said afterwards was if there's somebody in your life that you would feel you needed another, ask yourself, if that person died, would you feel like you needed more time with that person, or you needed to say something or do something? And if the answer is yes, then why don't you do it right now?
yeah,
I mean, that was
uh,
the summary. Those were his exact words, but that's the key takeaway: is why wait and why have regrets? And you're right though, as far as money goes, you and I were talking, what's he going to do after? This is not a question about needing a little more money to retire. He's 93 years old. So this is it. This is his life, and it is what it is. And I mean, there's stories about him not being the greatest father and not being there. I mean, his kids are doing okay financially, and he doesn't have any regrets, and he carved his life out the way he wanted to. So it's not the life I want, but yeah, that was important. From a business standpoint, though, the company is still doing very well, very, very healthy. Buybacks and the amount of cash. Two things that I really took away. One was the question around him selling Apple, and I know you saw that. What were your thoughts on that? It was a shocker to me for him to make that announcement. And he said he told Tim Cook he told Tim on Friday. So Tim Cook was there. Bill Gates was there. Ackman was there. There's several other people in the audience. They get to sit in a special reserve section of the front. But he said, I told Tim yesterday that I was going to sell these shares. And it was the first question that Becky asked. So what were your thoughts on that? Any
well, so this kind of goes back to a question about insider trading and why, no, I'm not talking about in like illegal insider trading. I'm talking about like CEOs of companies. Like you look at people like, Warren Buffett at Berkshire Hathaway, or you look at someone like Mark Zuckerberg. Let's use Zuckerberg as an example. Zuckerberg's sells a lot of Meta, a lot of Facebook all the time. And there could be any number of reasons why someone like that sells. And it could be, well, for most CEOs who take their company public, it's that they that's where their wealth is, right? That's how they unlock their wealth. And so they have these automated sell programs where they're generating cash to go do something else in their life. Maybe they're buying an investment into another company. Maybe they're buying and building a new home. Maybe they're just putting some money, taking some money off the table because that's where the bulk of their wealth is. So I wasn't necessarily disheartened the fact that Buffett was selling Apple. Now,
Well, this
because it was
wasn't
only
Buffett's
13%.
personal shares.
Yeah,
This
because it
was
was only
Berkshire Hathaway
13%.
shares.
Right. If it would have been, if they said, no, we're out of Apple,
Yeah.
completely out of Apple, different story, right? Then you're like, okay, something happened to make Warren lose his faith in Apple for some, whether it's product balance, their balance sheet, their CEO leadership, whatever it is. That obviously is not the case. That's one of the takeaways I had from listening to the commentary surrounding his selling of Apple. It does raise a question, though, of what did he need the cash for?
But
Why
yeah,
was
so
he selling Apple?
there's a couple
Raise that
reasons you and I are
cash.
talking ahead of time why Buffett sells. And one reason is he no longer believes the company. He believes the company's overvalued. He doesn't believe there's further value. And that was addressed in the meeting that Warren said, I suspect that after I'm gone, Apple will still be our number one holding. So if he didn't feel there was still some remaining value in Apple, I don't think he'd make that statement. He had no need to make that statement. He could, so but he didn't come out and say the reason why he sold. And then you and I were talking about just the enormous pile of cash that he has sitting on the sidelines, $168 billion. And he had a big tax bill this year. So, one of the things that I thought was, well, maybe he sold it to pay the taxes. But I mean, if you've got 100 whatever billion in the bank before he sold that Apple position, why would he need to take money out of the bank to pay? Why sell Apple to pay your taxes? Maybe that's the reason. But another potential reason is he's trying to build cash up to go buy something big. And
Every great investor I've ever studied, I mean, like the big guys, the Warren Buffetts, the Bill Ackmans, you threw his name out there. He's a very active, very good hedge fund manager. The David Einhorns, the George Soros types of the world.
Howard
They,
Marks,
yeah, Howard Marks. Um,
Dalio.
they raise cash all the time. And it doesn't always mean that they don't like the companies anymore. Sometimes it means they feel like with the analysis they've done, they feel like companies have hit valuations that's where they think they should go. In fact, sometimes they've exceeded it. If you think something is only worth $160 and it's trading at $190, well, then maybe, yeah, take some of that off the table, because when you've been in the trading game, the investing game long enough, you realize that we eventually have these corrections to the norm. And when they do come, having dry powder is the
Right.
analogy that's used all the time, to be able to jump back into that same company again and buy it back at a lower level is actually a really proven long-term success tool. And so maybe it's a statement that Berkshire is making about the valuations of the market right now, that they feel it's pretty pricey and they're okay sitting on cash and waiting for some type of correction. I don't know that necessarily timing wise says the correction's coming right now, but likely sometime in the future. And if you look at some of the other things that are out there, I know we've talked about some of them quite often, the inflation problem, what the Fed is doing with interest rates, the inverted yield curve situation that continues to be out there. Those are types of things that long-term big portfolio managers are looking at, saying, yeah, we've had a nice run and maybe it's time for a little bit of a pullback. And in preparation for that, I'm going to take some money off the table and get some dry powder.
Yeah, I think you're right. That he's famous for that and looking for opportunities to buy when everybody else is fearful. But right now, I think we're on the greed end of the spectrum where the market is still bullish, and you are seeing a lot of voices. We don't have. enough contrarian people that are out there. I gotta pull a quote that I got here. You know, Templeton's quote, right, about markets. Um, Sir John Templeton. I want to get it right, so I have it here in these notes. Just
I
give me
thought you were going to pull this out. Look,
there you go. I bought a few of those. I got a few extras. The capitalism.
you're
Card. No,
the card
I was going
carrying
to show
capital.
this thing.
Okay, there you go.
Bull market progress. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. And we are nowhere near optimism and euphoria. We're not at euphoria yet. If you believe that, there's a lot of people that are looking for bearish reasons. And Buffett specifically said, we don't do forecasts. So we don't forecast. And I think they have to look at the market though. But I just wonder how close they are to some sort of an acquisition and what it might be. I didn't get any indications, but the one thing I wanted to say is we do have a lot of people here who are viewers who I know some of you have been to Berkshire Hathaway. I've talked to a few of you. You've been to the Omaha meeting before, and at least one or two of you are the reason why I decided to go because you said it was great. So in others, you read up and pay attention. So I'd love for you to put in the comments of why you think Apple, why Berkshire sold Apple. What do you think is the reason? So go ahead and put it down in the comments here on YouTube. I'd love to hear that discussion.
So to turn the page a little bit, unless you had anything you wanted to throw, am I leaving?
Are we going to talk about Apple next?
That's what I was going to say. Let's talk about Apple a little bit. And, their latest earnings report, they announced a record, what was it, $110 billion buyback?
Yeah, 110.
Just obviously, here's another company sitting on an enormous pile of cash that they feel like the best value in that with a lot of that cash right now is to buy back their own shares because they believe where they're going as a company is the right place. And they continue to do so. I think it's interesting that Apple, I think, is finally in the forefront, not the forefront, but they're finally participating in discussions on artificial intelligence. And we had the event this week, the iPad event, where they talked about AI and some of the integrations that they're going to be doing inside of their platform. And I still believe from an AI standpoint, if you're strictly looking at investing in AI, this is probably a stock that has not participated in a euphoric run-up because of throwing out AI in a conference call or having some reference to some future plans they have with AI. They are finally starting to talk about it with this last earnings report. I was really optimistic about how this last event went. Obviously, the market was too. We got a nice pop-up with the earnings. Not quite back to all-time highs yet, but not too far off either. I mean, about 10% off all-time highs with Apple right now. So I'm a bull. I'm almost always a bull on Apple. I know you have a valuation. You think Apple's a little overvalued still at these levels.
Yeah, I still think it's priced in the 150s, but it can be higher. So there's a blog. I love Substack. There's been we're going to talk about a couple Substacks. There's a Substack called Market Sentiment. I got a newsletter from them today. Let's see just so you can see the logo. Market Sentiment at Market Sentiment is the
You're not sharing your screen.
Oh, I'm not sharing my screen. Well, then
no.
let's fix that. So in this Market Sentiment, they did this visual Apple 10K, which is really cool. Did you see this email? I think I forwarded.
I did. Yeah, that is really cool.
I'm a visual person, so you can see where the revenue comes from. 52.3% of their revenue is from iPhone, wearables, Mac, iPads are smaller, but this is really why Apple's been getting the multiple that's so much higher than what it has in the past. Is this services, which is it's not all pure gross margin, but this is very high gross margin business. And so seeing that grow, and it's really, I mean, if this $85.2 billion, that's a good business right there. That is a really nice business. We say it's a small part, but of Apple, but it's pretty good. You can see where their revenue comes from, how Apple's done. This is a neat flow to see where the revenue comes from and where their expenses go. These sort of river tributary things are kind of interesting, but this is the concern, is that we've got a lot of negative numbers here. So wearables down 3%, iPads down 3%, Macs down 27%, iPhones down 2%. So we're all products. Services are up 9%. So that's great. But that's, when you got all these negative net revenues down 3% year over year. And if we look at where cost of revenue, so those are good. The costs going down, anything down here going down is good for you, except for the green ones, the profit lines. You want all these red ones going down and the green ones going up. But profit was net down, and overall and then a waterfall chart of where their cash flow is, looking at balance sheet and liabilities and some of their fundamentals. So profit margin is continuing to grow, and this is really a reflection. You can see COVID had a very good impact on Apple. Was a good opportunity to buy them, especially with services happening around the same time, like Apple TV and all this other products that are in services. So some of these numbers, operating income not so good, but earnings per share up. Some mixed stuff. Long-term debt is working its way down. This is I love looking through this if you wanted to take some time to plow through it. But it really was the buybacks that drove the big move in the company this particular time. So I've traded it bullishly. I'm in a covered call. I did have there's a couple of events that are since earnings that we can talk about. And one is this is the Apple iProduct, the product announcement, the new iPad. You want to uncover that one, appeal that one a little bit?
In my opinion, it was a nothing burger other than their conversations about AI.
Agreed. But have you heard of the absolute uproar over the commercial?
I actually did see something where they issued an apology,
right?
But
So
I didn't actually dig into the details. What happened?
So Tim introduced this video showing all of these analog devices that you've used, everything analog that you can imagine. So everything from violins and metronomes to LPs, and they have this giant mechanical press.
I'm remembering now.
And they crush everything, crush it. And they show all of this stuff getting just, and then it's an iPad. People are losing their freaking minds over this thing. How stupid is Apple? Let me tell you, it is pure genius that they did this. And there's not a single person who is going to not buy an Apple product because of that. I know there's people that I've communicated with, and they are real on Twitter. They're like, I can't believe Apple did this. I'm like, what are you, nuts? Genius. It's like when Coke got rid of Coke. Okay. There was never a plan to get rid of Coke. They were never going to get rid of original Coke, but sales were dwindling. Pepsi was doing okay. Coke drinkers were switching to Pepsi, and they said, okay, we got new Coke and we're going to get rid of the old Coke. No freaking way. For 100 years, are they going to get rid of old Coke? But that's what they said. And everybody went nuts. And everybody said, Coke, you are such idiots. You can't take away my Coke. Give me my Coke. And the marketers are all like, yes. I think the marketers knew exactly what was going to happen. You are outraged. You are pissed off. Guess what? That's an emotion, and you are thinking, and you are emotional. Apple is dominating the conversation on FinTwit right now. Every single person has an opinion about this video and how pissed off they are. It's freaking genius. Are you kidding me?
Bad press is good press, right?
There's no such thing as bad press.
Right.
And even so, now it's, we're sorry, we were insensitive. They're loving it. It worked. They wanted everybody talking about it. It's exactly what happened. I happen to think it was a pretty creative ad. I liked it. But I mean, you have to look at it from the standpoint of what was the goal. And the goal is to get attention, to get people seeing it. And that's exactly what worked. And you know what? iPad sales, I'll bet you a paycheck. iPad sales go up next time. iPad sales will increase because of this ad. Now, I'm not going to buy one because I have 3 that are dead. I can't throw them away, but I got 3 that are basically web browsers now. I can't update. I can't run any apps because I have the very original one. That I got one from 2 years later that I won at a golf tournament, and then I got an iPad Mini that I bought for my son, and none of them are updated anymore. Anything over 5 years on iPad, they're like, "Oh, sorry, it doesn't support the new software." So these new iPads, you're gonna go spend $800 or $1,000, and then in 5 years it's not going to work. At least your MacBook will work, but
Yeah,
I don't know. So anyway, I'm not a big iPad fan. The only time do you have an iPad?
I do. I have 3 of them.
What do they're not yours.
They don't know. My kids use them. I I'm not a fan of the iPad because I can do everything from my phone
Right?
and it
So when
fits
do
in my
you
pocket.
you want to know the only time I used an iPad? Watching movies on a plane.
Yeah.
That's the only time I have to
And
bring my
now
iPad
most
because I'm going on
flights
a plane. That's the
and now
only time.
most flights have the TV in the back of your seat now, right?
Right. Yeah. Or
Now you don't
Bluetooth.
always get the movie you want if you want to bring your own movie with you, but
And I finally jumped up to the bigger iPhone, and so I can watch the movies on my phone just as good. I don't understand the use case. Now, with the M4 chip, I do think if you get that and a decent keyboard, it can be a MacBook Air, right? It can be your laptop, and thinner and lightweight. And yeah, so I think if somebody's going to use it to replace it, to literally replace, I mean, who has everything except for Kathy? Is she listening to us? I mean, who has the MacBook, an iPad, the Apple Vision, an iPhone, the freaking
think
headphones? I love Apple. I love their products, but
I think the only thing I don't have are the vision, the goggles yet. And I know we've had this conversation on this recording before on our YouTube channel about these. I'm gonna get one. I just don't know if I can spend $3,500.
you can spend through. Just don't tell your wife. Make it a business expense.
Where am I gonna use them?
Hey, you and I have the same accountant. Let's talk to him. Hey, Todd, can I make this so you know what Todd will say? Sure, business expense.
There you go. There you go.
All right. Hey, what was I gonna say? Oh, pivoting here. Speaking of Twitter, another guy that we like to follow, and you get his newsletter is Macro Alf. I like to give credit where credit is due. Alf on Twitter, Macro Alf, does the macro compass, and he's also got a pretty decent podcast going with one of our friends, Brent Donnelly. So Brent from Spectra Markets wrote Alpha Trader, and then some other trading book too that's pretty good. But the Alpha Trader, I think, is a really good book. And we keep talking about it, but we haven't done it. We need to get Brent on this podcast. He's fun
We
to
do.
talk to. Those guys tend to go a little bit deep, I think, a little deeper than we go, and a little bit wonky down the economics standpoint. But Macro Compass and it's Alfonso Peccatelio. Did I get it right? So you can find Alf on Substack at the Macro Compass, and also on Twitter on Macro. I do want to find him just so I can show people.
Yeah, he's at Macro Alf on Twitter. So
there he is, Macro Alf. So I follow him. He's, I got to tell you, he's one of the voices that are not. He's very calm, very informative. He's not like some people get my blood pressure going. This guy's pretty realistic and grounded. So I like Alf. But anyways, the reason I mention this is he talks about one of my favorite things, and that is the yield curve. And so real simply, yield curve is the yield, which is how much interest you earn when you buy a treasury bond. And there's different term bonds. You can buy a 1 month, a 3 month, a 4 month, a 6 month, a year, all the way out to 30 or longer. And normally you would get more money, more yield for committing your money for a longer period of time. That if you've got a short term, most people think, oh, that makes sense because you should if you're going to tie up your money, you should get a higher interest rate. Well, that's not what's happening right now. Since April of 2022, we've had what's known as an inverted yield curve. And so this primer on how yield curves work is worth looking at, although there's some stuff missing here because we're not showing a yield curve inverted here. He's showing bull flattening, bull steepening, bear flattening, and bear steepening. So this is worth a read, and also you can listen to it too if you wanted to. So he did a nice job. It's only like 7 minutes long, so I would encourage people to take a look at it. And it reminded me that I don't know if I've done it on this podcast, but I like to look at the Treasury yield curves because I'm a trust but verify person, and so I think looking at it this way is the best way to look at it. You can see the surface, and this is back in January 2021, and I have the data going back to 1958. It's just too much to look at and get your head around. But this is when we had zero interest rates, and so the Treasury yield curves aren't set by the Fed, but they're closely tied to the Fed. And so as the Fed raises rates, we tend to see short-term interest rates. And if you, I don't know if I look at this surface and I think, oh, yes, this is a mountain. And normally what we have is a flat valley that goes up higher. So this was very abnormal to be zero. Normally what happens is we get something other than zero for short terms, but definitely sloping back. Anyways, the shape is right here. And in April of 2022, what happened was we got the front end of the yield curve going up higher than the back end. And that just doesn't make sense to a lot of people. You're going to earn more money with shorter term rates than longer term rates. That just doesn't sound right. Does it, Greg?
No, it's not supposed to, right? I mean, that's the type of yield curve long term. If it stays that way, that's the type of yield curves that puts banks out of business.
Right.
Because banks make their money by borrowing money from you as a depositor and then lending it out at this difference of the yield curve. And when it's inverted, it makes it so that there's actually no way for them to make money.
Well, they get money from the Fed too, which is right. So the front end of the curve is closer tied to the Fed.
Right.
And so they can borrow from the Fed, and they borrow from us too. We give them money and then they loan it out. But right now it's this back end of the yield curve, which for 22 months, this back end of the yield curve, you can see the green is higher. And we thought we were going to start to get an inversion about a year ago. Things were starting to look like they were going to go back to normal, and we were going to get the back end of the yield curve was going up, and then it dropped back down. And so it has been persistent. And historically, you might, when you hear people talk about yield curves, a lot of times what they're doing is looking at either the 10-year and the 2-year or the 10-year and the 3-month. And either one, they both have different purposes. In either case, both are inverted now. And if you look at those, I prefer to look at the 10 and the 3-month. And when that inverts, we have always had a recession. In the past, the average is 16 months that you would get a recession. When the 10 and the 3-month invert, 16 months later, on average, sometimes sooner, sometimes a little longer. We are definitely longer. And this is, clear indication because this is, you and I had this opportunity when we were in San Diego right when this happened. Do you remember? We were in San Diego when this happened.
Yeah.
And we talked to David Bernsen, who's at the time, I think he was with Nationwide. He was the chief economist for Nationwide. He in the past had been the chief economist for, I think, Fannie Mae. And
Right.
now he works for David Kotok at Cumberland. And I asked the question, so is it a causal thing or is it a symptom? So does this cause recessions or warn us of a recession? And his answer was both. And you hit on it. If a bank has to borrow money at a higher rate than they loan it out for, that's not sustainable. Now, the banks have been able to command a higher. If you look at the 30-year mortgage right now, they're over 7%. So they've been able to get higher rates, which is kind of interesting. And there's a lot of dynamics that are going on here. I saw a metric that said that most businesses have refinanced their own debt, so they don't need to go get debt. The market is not very active because they went and borrowed all the money they could when they were able to get these really, really low rates, like 2-3% for long-term rates. And I think something like this, I don't know if this is right. It's like 50% of all corporate debt goes out to like 2035 or something like that. So there's a long time that a lot of these corporations and uh, outstanding number, I think 65% was the number I saw too last week on home mortgages. 65% of all home mortgages are around 3%.
Yeah, I know that was one of the really big pushes. When interest rates started to go below the 3 number, is everyone was refinancing their home mortgage, if you had one. In fact, some people would go and take mortgages out on their homes even after they were paid for because it was such cheap money to be able to lock it in at 2%, 2.5%, 3% yields. How long is that going to stay? I think there's definitely a shelf life with that. Like you said, the corporate debt is out to 2035. Mortgage debt's eventually going to reset. Not that those people who have a mortgage at 3% will ever refinance, but people are going to continue to demand new homes too. And those current rates are not going to stay. The current rate's at 7.5%, 8% on mortgage rate. It's going to change the dynamics. The interesting thing is we've been talking about the yield curve, and maybe this is a statement of, I don't know if it's society in general or just the market in general, is I remember when the yield curve inverted. Like you said, you and I were in San Diego a couple of years ago when this inverted. And I think so many traders right now, investors, expect the end result of that yield curve inversion to happen immediately.
Hmm.
It's like some magic button got clicked. Oh, the inverted yield curve happened. Here we go. Markets are going to crash. Economy's going into recession. But as you pointed out, that's not the case. In fact, the average, like you said, is 16 months later, we're in recession. And this one, I still think that it's correct in that it's predicting a recession. The weird dynamic we have now that no other inverted yield curve has had in the history of all inverted yield curves is the staggering amount of cash that it got pumped into the system in the last couple of years with COVID that may drag it out even longer. I mean, before we actually go into recession. I think there's still a lot of money that is chasing investments right now. It's chasing yield. And whether that's yield in bonds right now, because you can get 5.5% on a short-term bond, or whether it's in equities that have good earnings, that have good balance sheets, that maybe pay a dividend, maybe not, but there's still a lot of cash out there floating in the system that until that cash all dries up, I don't know that we really have to worry about that inverted yield curve. And maybe I'm mistaken, but that is definitely something that is different this time around. And maybe that's what's extending the life of this inverted yield curve, because so many investors, so many people who talk about inverted yield curves, like, oh, well, that didn't work. That was 2 years ago, and the markets have just kept going higher. So, and we haven't gone into recession. So obviously it's broken. It didn't work this time.
Yeah, there is a lot of cash, and we look at liquidity from a different. I know this is one of your favorite things to look at is the overnight repo, which has come down quite dramatically. We were up over $2 trillion, and now we're only down to 486 billion, which is still a lot of liquidity. And we've contended that this is sort of a big picture thing. This is our conversation at, I guess, 2 years ago when we were at the Rocky Mount out in Jackson Hole for that economic summit, talking with Paul McCulley, that we shouldn't really be concerned about liquidity being a problem as long as there's any money in the repurchase agreements. Basically, for those of you that aren't familiar, what this means is this means banks have too much money, literally too much money, and they have to give it to the Fed to hold it for them overnight, and they earn interest on it from the Fed overnight. So that's what this is. And typically, this is a facility that only gets used occasionally for special situations. And since COVID, it got used quite a bit. and there's still a ton of money there. And then of course there's the Fed balance sheet, which has a ton of money as well. So there's lots of capital. This is what's meant by liquidity that's out there. There's a lot of money that's chasing only so many places to put it. For these reasons, I still remain bullish on the year. I mean, I still contend that, we're going to get closer to 54, hopefully 54.20.69 by the end of the year. That's my forecast for the S&P 500. But, we're going to have things that can derail it between now and then. The other thing historically, you and I didn't talk about, but, election coming up, the election, the data for an election year is just astounding. I'm going to have some numbers that I can share in terms of what the 4th years of presidencies have done. So listen, so this is kind of cherry picking data, but if the first quarter was up 10%, which our quarter was, this has happened 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 times since 1928 on the 4th year of a presidential year. So of those times, every single year was higher. And the average return on the year is 19%. So by those numbers, if you say we're going to have a typical year, we've got another 10% to go in the market before we get to the end of the year. And I think there's a lot of reasons to believe that. The Michigas in Washington, D.C., while it is absolutely terrible and deserves a lot of attention, it's really good for the market. And so there are some interesting things we can talk about. I know I've been looking at the VIX futures, and the VIX futures is pricing in a 7% move over the election. I don't know if it's bullish or bearish, but looking at the VIX futures, you can see a big jump around the election. So we'll talk more about the election as we get closer and closer to it. Hopefully not talking about politics, but talking about markets. I'm sticking bullish for the rest of the year.
Okay, I'm taking the other side.
Okay.
I think I think we're gonna put in a double top right here. And we're gonna get, I mean, we're already pretty close. We're within like 40 points of the high that we hit in February or March. But I think we're about ready to have I believe a sizable pullback into the summer. Now, we still could have a rally between November and the end of the year that gets us back to an all-time high. So we may both be correct. I just think we've got a sizable correction coming in the next 90 to 120 days as we go through the summer doldrums that sometimes seasonality just plays into, right? You've all heard the term sell in May and go away. We are in May.
Right. And that may not be case, but I do have another chart here that shows the 20 looking at 4th years of a presidency, and the average through the beginning of June is 0, flat. And then this is the 4th year of a presidency, all 4th years, not just the ones that are up 10%. The ones that are up 10% tend to do even better, but of all 4th year presidencies, starting on June 1st, you're up 10% since there to the end of the year. And I just, from a policy standpoint, there's politicians don't want to rock the boat. They don't want to piss off people before they go to the polls. Plus, we tend to get things that are stimulative, whether it's directly or indirectly, towards the end of the year. We don't get big changes because everybody's sort of waiting for the next election. So for those reasons, like I said, I'll stay bullish. But I got to tell you, you're wrong, Greg. The market's going higher.
All right, good. The great thing is trade what's in front of you. Right now, it's still bullish, right? So,
and I'll trade bearishly, as you know.
Yep, we can do that. I reserve the right to change my mind.
Yeah, that Airbnb trade this week that I shared with our community was enough to pay for your membership.
That was and I did one the previous week to pay for your membership for the 2nd year on Apple.
Yes, you did an Apple trade that was phenomenal.
Yeah, that worked out really well. Yeah. So, all right. Well,
by the way, I don't believe you should take a victory lap on a trade unless you let people know you're in the race. So Greg and I do share our trades with people before we place them or when we place them. So we have a community of people who are either through options. Some people get it through Options Animal, some through Trader Oasis, but Trader Oasis, we do them a lot more frequently. So you get like 5 to 8 ideas for our advanced members. And we've got a lot of very happy clients. Our satisfaction and for those people has been very high because we've they get a lot out of it. So it's not for everybody, but for those of you that are interested in what we do, you should check us out.
All right, my friend. Have a good weekend.
All right, we'll see you later.
We'll
Hope
talk
everything's
next week.
okay with. Oh, your wife's okay. She's flat tire, just a flat
Yeah,
tire.
just flat tire. Flat tire.
Okay.
She's good. All right.
I said hi.
All right. Thanks, Eric.
See ya. Bye.